running or not, but definitely there were moments there of a real focus on the domestic agenda was something
here today?
2024. Now we've already heard it from Ron Klain 2 or 3 times. It's not if, but when the president announces.
Marie, thank you. And again, happy birthday. Birthday love from the Open Seas way on that channel.
So, some of the misses this earnings season have been underperforming. There's obviously also been optimism around, China reopening,
nice and warmed
potential
up.
for soft landing in the U.S.
100 burpees, 100
I
squats
think
today.
those have been some of the drivers of the rally in January and year to date.
Can I pick up
Start
on
with
that point? I
squats.
think it's a really important one. Your point is
10 rounds, 10, 10.
made
Keep
about
it
valuations
easy.
of multinationals. How do you pair that with the thirst, the hunger right now to get exposure to a better international story off the back of China reopening?
Sure. Well, I think the multinationals will certainly have some tailwinds in terms of the global economic backdrop in China reopening, in terms of just if the dollar, we see some reversals there, but overall I think they've benefited from some of these trends that we've been talking about for many decades. And on China reopening specifically, obviously some areas like materials and commodities have rallied on the China reopening expectations. We think the recovery there will be more consumption-led, so perhaps some different beneficiaries than the typical China recovery story.
Clearly the overwhelming feature of some of the research for you guys over the last few months, Jill, has been the margin pressure. Is there a shelter from some of those things? Where do you find that shelter?
Yeah, so I think so. We're definitely seeing cross currents within the margin backdrop. So I think earnings and margin expectations for the overall market have been too lofty. We do expect earnings estimates to come down further this year, even after the large amount they've been slashed heading into this earnings season. We're looking for a 9% decline in earnings year over year, which is about half of the typical earnings decline you'd see in a recession, given our expectations that if we do see one, it'll be mild. Consensus is still looking for slightly positive growth. But I think there are, a number of companies and sectors within the market that, could see some margin benefits this year. Areas like some of the consumer staples or home builders, where you're seeing, lumber prices or many of the input costs reverse. So we think this year is definitely going to be less about macro, more about cross currents in the market, and it's going to be a good environment for, picking stocks and sectors, active management.
I want to finish on this line here from you, because I teased it. Risky sectors are safe, safe sectors are risky. Help us all understand that, Jill.
Sure, I think when you look at sectors like tech, they've actually seen their beta go up, and tech is one of the higher beta sectors. Whereas if you look at some of the sectors that are traditionally riskier, higher beta sectors like financial and energy, they've actually seen their betas decline a lot over the last year and enter some of the now lower beta sectors. So I think risk profiles of some sectors have changed. We've seen that within small caps as well. Small cap healthcare is one of the areas within small caps that I've been relatively more cautious on. Typically you want to own healthcare in a recession, but healthcare in small caps has deteriorated dramatically in quality. 60% of that sector in small caps is non-earning stocks. So I think there are some shifts we've seen in sectors that, the typical recessionary playbook may not necessarily apply, where, financials looks a lot more like a high quality sector relative to how it looked going into the financial crisis. Energy companies have much more disciplined now. They're morphing into free cash flow generating companies. So we're definitely seeing a lot of shifts in sector risk profiles.
Hey Jill, I've really enjoyed reading the research, particularly over the last month or so to start the year. Jill Carey-Hill there at Bank of America, alongside Savita Subramanian, putting out some brilliant equity research in the last couple of months. I want to get you a few more headlines. Alphabet, Katie Mines, you talked about Microsoft. Alphabet getting in early trading.
Yeah, we're down about 5.5% right now, so just off of session lows, but could be the worst day for the stock in some time. And this is about this AI competition and race to introduce these products. We were just talking about Microsoft making an investment into OpenAI. Google is also trying to do this with its own search engine with their AI chatbot Bard. But Reuters is actually reporting this morning that in an online advertisement for Bard, it was delivering inaccurate answers, which maybe is why we are seeing such a down move for the stock right now, considering everyone seems to be rushing to put out this technology. If it is inaccurate technology, obviously that puts you at a competitive disadvantage at a time when Microsoft is ramping this up, Baidu is ramping this up. We're seeing millions and millions of dollars in funding going to various startups in this space. It's a race, John, and right now Alphabet doesn't look like they're out front.
The spread between those two companies, those two names right now, fascinating. Thank you. Microsoft up by 3%, Alphabet down by about 5%. Coming up, Fed speak, picking up following last week's decision.
We're going to need to do further rate increases, as we said, and we think that we'll need to hold the policy at a restrictive level for a period of time.
We'll get you the latest comments from the New York Fed President, John Williams and Mike McKee, up next.
In business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane. We refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, your entire savings in it, just a couple of. So the mutual fund was created to give a diversified extra management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact, there are half the number of public companies that there were in 2000, and there were 5 times the number of private equity companies. So just being an investable return, you look at private markets, and it's significantly bigger. So the question is, that return that used to be captured in the public markets is now captured in the private market. But the problem, as you know, is you're really tied up for a long time when you invest in private equity. And so trying to figure out a way to solve the same problem my grandfather was trying to solve, which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors. What I'm describing is a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it into the average investor.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, on MDB wouldn't happen. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
We're just at the beginning of this process. The disinflationary process, the process of getting inflation down, has begun. It has a long way to go. These are the very early stages of disinflation. It's not going to be, we don't think, smooth. It's probably going to be bumpy. This process is likely to take quite a bit of time. My guess is it will take certainly into not just this year, but next year to get down close to 2%. We think that we're going to need to do further rate increases, keep rates at a restricted level for a period of time. In many cases, it will take some time, and we'll have to do more rate increases, and then we'll have to look around to see whether we've done enough.
Chairman Powell, for the most part, sticking to script yesterday, setting the stage for a busy week of Fed speak. New York Fed President John Williams speaking right now, saying moments ago, we still have work to do. If financial conditions loosen, higher rates may be needed. And going on to say this just a moment ago, putting a timeline on a period of time. Maintain restrictive stance for a few years. That coming in just moments ago.
Yeah, a restrictive stance, though, might be lower than 5.25%. He did say that he still thinks that a 5.25%, what the Fed thought they would be at when they did their last dot plot in December, is still a reasonable view. And he came back saying, basically, as Jay Powell did, still have our work cut out for us. We are barely into restricted at this point, and a 25 basis point increase seems like the right size. And then adding, as you just mentioned, that looser financial conditions might apply, they have to go higher than 5.25% if inflation remains sticky. And that's the big question is, they don't know exactly what's going to happen, and Williams is basically saying, we're data dependent, we're going to follow what the data are telling us, and that might mean we go higher, that might mean we stop at 5.25%, but he did suggest it's going to stay there for a while, which is the base case message from the Fed. And it seems like the markets are finally listening. When you look at the yield curve over the last week, from last Wednesday, that's the line on the bottom, to today, the white line, you can see that markets have priced in higher rate level all across the curve. And it does appear that maybe they got the message. You did mention there's a lot of Fed speak out there today. Barr, Bostic, Kashkari, and Waller yet to come. And we have Lisa Cook speaking now, although nothing's hit the wire from her yet. So I guess basically we could have simplified this and just handed out a piece of paper to all of them and just come out and say, yeah, what he said. That Powell guy.
And what she said, what he said, and what they all said. Mike, I want to finish on this. There's been some pushback around financial conditions. All of this depends on how you measure financial conditions and over what time period. John Williams, moments ago, said financial conditions broadly have tightened a lot in a past year. Mike, the chairman took some criticism on Wednesday when he made similar comments in the news conference. Where were you on this debate?
But as you say, it depends on the time horizon. If you look at financial conditions from the time the Fed started raising rates in 2022, then yes, they've tightened significantly. Over the past 3 or 4 months, they have come down. It just depends on whether you think financial conditions are slowing the economy enough, slowing inflation enough. And at this point, the Fed isn't sure. Even though they've come down, we have seen inflation come down. So they're going to keep an eye on this. And of course, next Wednesday, we've got the CPI.
Mike, there's a feeling they don't care about the equity market in maybe the same way they did in the summer. Would that be the correct read?
Or for the last couple of years, yeah. It's like mom used to like me, but she doesn't anymore. The Fed is.
Are you talking about equity market bears being
the Fed has got a credibility question, and they say they need to keep rates high long enough to keep the inflation rate going down. It's been a long time since they had to do that. People on Wall Street word around them, and so now it's going to be a test of wills. Who can go longer, the Fed or the markets, hoping for a Fed put.
Mike, thank you. As always, appreciate it. About 22 minutes into the session, we're lower by 0.5% on the S&P, on the Nasdaq down by 0.6%. Just to lift the lid on the index and break it down sector to sector, is Abby.
John, very interesting sector action today, only because of the decline that we're seeing right now, relatively modest, yet most sectors for the S&P 500 lower, some of them significantly. Communication services in particular down 3.2% on that alphabet call that you and Kelly were talking about on the AI competition. We also have utilities, consumer discretionary, staples and industrials down there. So lots of defense down. On the year though, take a look at those travel sectors, airlines, hotels, railroads, and there's Uber, as we were talking about, up 44% this year.
Abby, thank you. That's your sector price action. The broader index down 0.4% on the S&P. Your trading diary up next.
USA, but the sign on the CEO's door often says, Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Added the chief executives of Adobe, Deloitte, Gap, VMware. And that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the proof of India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas in the U.S. And it's a safe bet that some of them will eventually find their way to the C-suite.
Close to 26 minutes into the session, equities taking a little bite out of a big year-to-date gain on the S&P and on the Nasdaq too. Equities right now down about 0.5% on the S&P, still up on the year by about 8%. On the Nasdaq, close to 16 percentage points higher, lower on the session by 0.8%. As the price action hits the trading diary, coming up, Fed speak, Barr, Bostic, Kashgari, Waller, all on deck. Cook talking right now. President Biden discussing the US economy at 2 p.m. Eastern time. We get earnings after the bout from Disney, another round of jobless claims tomorrow morning, and we end the week with a UMich sentiment survey to close out Friday and get straight into the weekend. Right from New York, that is it for me. Thank you very much for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
Investing a lot in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20+ experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest there's going to be roses in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority.
What's going to keep winning World Cup? This is a free as the economic picture does.
Why do the biggest names in business choose Bloomberg?
Great question.
Great question.
Great question. Great question. Next question I get all night.
Bloomberg. answers great questions.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Lynch. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things American, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor. $1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in the house. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became Number Hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people, all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realised very early that there was a problem. Hundreds of people started arriving at the bottling plants with their lucky bottle caps. They realised something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted a $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anisita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby school to
I'm sorry. Why'd you catch it?
Molotov cocktails thrown.
You could have caught that, bro. Bro.
It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others.
Try
When I was
again.
in the Philippines, I tracked down Anisita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, the family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number feed. The biggest revelation from my reporting was rumours that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilise the situation and to frame the owners of the coalitions that were fighting them to try and curry favour. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
When I was children, is to build up also on that food. And so you see people marching the food. So we had mounted our own campaign within the year.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting
Okay.
quarters to try and resolve the
We're
problem.
done. That
So he
was
sent
kind of
orders
hard.
all the way to the highest courts in
A lot of squats, not a really heavy weight, but
in America.
good
Those
workout.
courts decided that this was a
All right,
problem that
see ya.
should be heard in the Philippines, not in